So my next guest is a former Deputy Division Chief at the IMF, Ousmene Mandeng, is now Head of Public Sector Investment at Ashmore Group, the emerging markets-focused fund manager that handles more than $45 billion of assets. I'm pleased to say he joins me now from the scene of that G20 meeting. Thanks so much, Mr. Mandeng, for speaking to us. So as we were hearing there, both US Treasury Secretary Tim Geithner and France's President Nicolas Sarkozy talking about the possibility of a bigger role for the yuan. What are the long-term implications for the global monetary system?
Yes, no, indeed. It is, of course, it's the obvious topic. China is now the second largest economy in the world, and yet its currencies does not play any role whatsoever in the international monetary system. That is a deficiency that is now clearly being recognized here. And the talk is actually not only about China, it's also about bringing other emerging markets into the system, which are now mere bystanders. Making them stakeholders of the system is one of the priorities that had been discussed here. So the focus is on China, but again, it goes beyond, and other currencies are also, other emerging market currencies are also increasingly making noises. They also have a part to play in the international monetary system.
Sarkozy and Geithner were saying, though, that China playing a bigger role, the possibility of China playing a bigger role, very much depended on exchange rate flexibility, free capital flows. Is that something the Chinese are prepared to do?
Well, I think the question for China is, of course, a function of its domestic policy priorities as well as its international role. And I think China will weigh the priorities domestically and externally, and to see at what pace will it pursue towards what is needed, which is basically full capital account convertibility. But if you look at the history of international currencies, you see the picture is not kind of black and white. I mean, there is a gray zone that can be exploited. Currencies that had been pegged to other currencies played a role in the international monetary system, notably the French franc, where it was pegged to the German mark. So I think one shouldn't be, let's say, not look necessarily for the pure attributes of reserve currencies, but should look at this gray zone. And here China clearly can play a role today.
Yeah, but I guess developed economies view a system of floating, largely market-determined exchange rates as being the most flexible or the most stable.
Indeed, I mean, one of the claims here was, of course, reiterate that the system overall needs more currency flexibility to allow more efficient lines of payment adjustment, and therefore, hopefully, a reduction of the substantial external imbalances that we currently observe. The question is, though, does it mean that China would have to adopt a fully flexible currency, or could it be something like a managed float that has been adopted by many other emerging market currencies? And I think if you talk to other policymakers, etc., it's unlikely we'll see, a system where they are all fully flexible currencies, but rather one where we have a mix, where some intervention will remain and currencies will be a little bit more managed than others. And I can see that, within that framework, that China probably will allow more adjustment over the medium term.
And I guess the problem is how you define the level of flexibility that is permitted. What about this concept of the International Monetary Fund acting as this global currency enforcer? I mean, do they really have the political, the economic strength, the clout to do that?
Well, I think that's part of the issues that have been discussed here. I mean, the IMF may require a broader mandate than what it has at the moment. And at the moment, its mandate is to look at currencies, but basically to secure or ensure current account convertibility to allow, the expansion of global trade. If the IMF has a broader role in shaping the international monetary system, then probably it will have to look as well at the capital account. And this was some of the issues that had been discussed here. And a broader role, possibly, widening the mandate of the IMF, is one of the possibilities.
Yeah.
But the claim also was the IMF, for that to do, it needs more teeth. It's not only a matter of giving it a broader mandate, but it is also a matter of giving it the teeth that is required to have effective surveillance, and therefore actually countries adhere to the policies, to their stated policies.